What is going on, traders? Welcome back to the Traveling Trader. Happy Monday to you. Let us get right into the cryptocurrency market analysis for the day. Looking at the top 30, there's only one coin that made any money in the last week or saw any gains in the last week. Other than that, everything else is deep in the red. If you look at the 7-day percentage change, and that coin is Tezos, right? It's up 4% in the last week. Bitcoin down 14%, Ethereum down almost 19, XRP down 15. So obviously, we are nearing bear market territory, and your strategy for trading has to change, right? You can't force swing trades in a market like this. You either accumulate for the long term at the identifiable support levels, or you just sit it out, right? Or you could do a combination of both, obviously. Sitting in some cash at most of the time is a good idea. Now, the proportion of cash to assets that you have in your portfolio obviously changes depending on the market, but those are really your only two choices. You have to be malleable depending on what the market is doing. And if you want access to the trade alerts, that link is in the description, where I send out all of my trades for both the crypto and the stock market. Looking at Bitcoin, now here's a very interesting chart. I mean, because the weekly and the daily are really forming the same pattern here, right? So you have this clear descending channel. Bitcoin on the weekly did fall below the 50 MA, found some support around the 100 EMA, which is this white line here, right? So it did fall below it. It did wick below it just a bit, but it's now trading above it. We did dip to around 64 or 6,500 yesterday. 6,515 was the low. So that's right around the 1.272 fib level. This is a fib extension, meaning it dropped below the 1 fib level, which was the swing low that we saw back in the last week of October. And we now hit an extension level of 1.272. Now, we did load up on Bitcoin at this price level. I did send out an alert that I am going to keep laddering my buys down until this pattern is broken and we have to reassess what happens at that point. But so far, Bitcoin is respecting this pattern both on the daily and the weekly. And obviously, the breakout from a descending channel is most likely an upwards break eventually, right? I'm not saying that that's going to happen tomorrow, but that is the breakout pattern that we see. Now, here's one thing that I do want to show you on Bitcoin's weekly chart. So if you go all the way back to the last, real market crash or last real bear market that we had, and I'm not talking about the one in 2018, I'm talking about the one going all the way back to 2014, 2015, right? Bitcoin went underneath the 100 EMA, which is this white line here, and it also found support at the 200 MA, which is this green line, right? But once it popped above both, it never really looked back until the next bull rally. So same thing here. We fell below the 100 EMA, which is the white line, found support at the 200 MA, and have now gone above it. So it looks like Bitcoin is respecting that pattern, right? Not wanting to be below the 100 EMA. I think if we break below the 100 EMA, then, you could plausibly say that Bitcoin is due for another bear market where we eventually retest this level that we had to break out of, back in April and May. So around the 5,700 level and potentially the 200 MA. Now, if you are new to this channel, I'm not really a hyperbolic trader. Like I'm not one of these guys that's calling for 3K or 4K or 5K. What you do in trading is you want to see how the asset reacts to certain levels, right? And then you reassess from there. So currently, Bitcoin is still holding this pattern. There's no reason for me to project a 4K Bitcoin. All I'm going to do is, keep trying to get the best price long term at this stage. Again, this is not a swing trading market. So calling for doom and gloom and saying that Bitcoin is going to hit, 3K by end of year, I mean, to me, there's really no value in that kind of analysis, if you even want to call it analysis. Looking at the daily, the one thing that is concerning to me, though, is the volume, right? So Not on this recent candle here, and I'll talk about this in a second, but just the overall volume. So if you use something like the VFI, which is, let me just erase this note here. But if you use something like the VFI, which is it attempts to measure whether the flow of volume is largely negative or positive, right? So a reading below 0 says that most volume is going outwardly. Most volume is negative, right? So that means that people are not holding on to their Bitcoin. They're actually panic selling it. And you could see that with the negative sentiment here. So the last time we had a reading below 0 is when Bitcoin crashed from 6,400 all the way down to 3,200 back in late 2018, right? I'm not saying that this indicates a crash. I'm just saying that it indicates negative sentiment. So I would like to see that volume come up, especially if we're going to have any sort of holiday rally or, rally anytime soon. I would like to see this volume start creeping up, especially when we have a few months to go before the halving in 2020. Now, this specific volume bar here for this specific day, if you pull up the moving average for the volume, right? There's a volume MA here, which is a moving average. You'll see in this orange line that anything above this is above average volume. So we actually had some really good volume on this candle, and that's how you could tell the difference between a dead cat bounce or a what is it called? A bull trap, or whether this bounce is real, is by looking at the volume. So far, this is accompanied by good volume, which leads me to believe that this is a legit bounce, at least in the short term. We're also oversold on the RSI, just the same way that we were oversold on the RSI at the last week of September, trading sideways before that pump all the way up to about 10,400. So in conclusion, like I said in the previous videos, going back months now, that, remember when I was saying that a retest of the 50 MA on the weekly was likely, and we did that. And I also said that a retest of the support, or a test of the support on the descending channel, is also the most plausible move, right? Trend is your friend until the end. So in my view, as long as we stay within this trend, we have to respect it. And currently we're still within this trend, regardless of if we wicked below it or not. The candle is still currently within this trend. Now, because this is a descending channel, to signify a reversal, it becomes easier because we are making lower highs, right? So descending channels, lower highs, lower lows. So that means that in order for this pattern to, if we're going to call a bullish reversal, then we just need to break above and close above this resistance significantly. But because it continues to make lower highs, that resistance is, the price of that resistance becomes less and less over time. So currently this resistance is around 96.30, 96.40. So we have to close above that in order for us to break this pattern positively, right? Now, on the flip side, if we close below the descending channel, right? So say we close below here at around 6,400 or below that, then I think we start entering dangerous territory, because like I said, you have this level here that Bitcoin had to basically break out of back in April, May, in order to signify a reversal, right? Which is this level here, which was support, going back to late 2018, and resistance coming up on April, May 2019. And once we broke out of that, then we were able to call Bitcoin's reversal, right, to the upside. And in this case, we tested that level as support again here with this last daily candle when we went all the way down to 6,500. So if we break and close below this, then I think we're in for potentially a world of hurt. Now, I'm still bullish on Bitcoin for the long term, but it just means that it will take a lot longer to break out of that pattern. So if we close below this, then a retest or a test of at least 5,400, which is the 1.618 fib extension level, is plausible. And at that point, it might take us a really long while to climb out, just in the same way that this went from November 2018 to May 2019. We could see something similar here all the way up until the halving in 2020. So I wouldn't like to do that. As I was saying before, best case scenario is a retest of the support of this descending channel, and then a gradual climb, and finally a breakout of resistance. In the short term, I'm leaning towards Bitcoin retesting at least the 50 MA here on this bounce, which is currently at around 8,400, especially if we continue to get volume like we did today. And at that point, you'll see shorts start to rise, right? Because shorts are still relatively low right now. But yeah, I mean, we could trade sideways here for a long while before seeing any sort of rally, even to something as, you know, as close as the 50 MA. I mean, back here in end of September, when we dropped down to support at the descending channel, you know, it was a month, almost exactly a month before we saw a rally. So I know that you can get caught in micro monitoring the chart and wanting something to happen imminently. But remember that Bitcoin has a very uncanny and sometimes irritating way of trading sideways. But yeah, so watch out for this level here. If we close below 6,400, then I think that more downside is possible and probably plausible, to be honest. But, you know, as long as we're staying within this pattern, then we have to respect it. Looking at the traditional markets, we see some upside in the market today. Dow Jones up about 0.4%, the S&P up about 0.6%, and NASDAQ up over 1%. And this is all on, obviously, the news about the U.S.-China trade talks. This right now is the main story, right? So this it does actually influence the markets on a day-to-day basis. When there's any little bit of news that the trade talks are potentially going to yield something positive, then we see little rallies in the market, and vice versa. So right now there's a little bit of news that there could be a phase one decided before end of year, phase one talks between US and China. And that currently is what's driving the market today. Don't be surprised if tomorrow, if there's a little piece of news that says that, you know, that the talks, somebody heard from somebody that the talks aren't going well, then you'll see a market downturn. But yeah, that's just how it goes when markets are trading at an all-time high and everyone is on pins and needles waiting to see what's going to happen next, right? So this is when, like I said it before, but this is when you start to kind of get the sense that the market is overbought, right? When there isn't much that's pushing the market up besides a couple of news stories, right? There's nothing else that's really driving the market currently. It you know, we've had some great earnings announcements, some great revenue figures, you know, some optimistic job growth, and the market is kind of overextended at the moment. And the only thing that it's waiting on or it's hinging on is this U.S.-China trade talks. Nothing else is driving the market. So that's how you can tell that it's overextended for sure. And the fact that we're at all-time highs makes it a little tenuous, and traders are, you know, nervously waiting to see what happens. Anyway, that is it for this video. Sign up to the trade alerts if you want to know what stocks I'm currently trading, what my portfolio looks like, and even for crypto as well. I send those out on a regular basis. Leave a comment, hit that thumbs up, subscribe to the channel if you haven't already, hit that notification bell. Stay safe out there. Peace.